For section 8-1 work together, we are going to complete the closing entries and then post those closing entries. So those two tasks, journalize the closing entries and post the closing entries. So we are going to be using the worksheet up here, and then down here we have our closing entries. So our closing entries are going to be on the 30th of April, the last day of the month. And then as a reminder, our 4 closing entries: number 1, our revenue; number 2, our expenses; number 3, the net income or net loss; and then our drawing. So let's do our revenue first. So we need to come up here and look at our revenue, which is just one sales account for $2,160. So our sales, you can see here, is a credit. So in order to cancel out a credit, we need to debit it. So we're going to do sales. We don't have any post reference, so no memo, receipt, or any of that. So we're going to debit $2,160. And then the opposite, we always put into income summary. We do the opposite into income summary. So sales, that debit comes from the opposite of what it is in our worksheet. So in our worksheet, we had a credit of $2,160. So we're going to debit it for $2,160 to cancel it out. And then we do the opposite to income summary. So that was our revenue. We do the 30th again. And we have our expenses. So let's come up here. Looks like all of our expenses are a debit, because we always debit expenses, so that makes sense. So then we need to credit those. And since we always list our debit first, we're going to type in income summary. And we'll worry about the total of our expenses later. Then next, we just need to put all of our expenses. We're going to get the accounts in there. Advertising expense, $460. These are all coming from our worksheet. So advertising expense, $460. That was a debit. So then we're crediting it to close it out. So all of our expenses we're going to credit. These are all coming straight from our worksheet. They're debits in the worksheet, so I'm going to credit them. I have all my expenses in there, and I credited them, and then I need to take the total of all these expenses and debit income summary for the total, so that this transaction debits equal credits. So the total of all my expenses is $1,483. Go through, add up all our expenses, and debit that. So that is our second closing entry. Our expenses. Our third one is we need to close out our net income or net loss. So let's go up here. It looks like we have a net income of $677. So if we have a net income and we are going to roll that into our capital account, that would increase the value of our company. So capital increases with the credit. So we're going to credit our capital account for $677. So the opposite we are going to do to income summary. So 30th income summary, a debit of $677, because we are going to credit our capital account. So Connor Whitney Capital, a debit of $677, the income summary, and a credit to our capital account. Remember, owner's equity increases with a credit because it's on the right side of the accounting equation. Net income would increase the value of our company, so we're going to credit the capital account. Now, our last closing entry is the drawing. This is the one that we are not going to use the income summary account. We are going to use our capital and our drawing account. So I'm going to get the 30th in here. And our drawing amount, how much money we withdraw from the company, would lower the value of the company. So how do we lower our capital account? For net income, we increased our capital account with a credit, so we must have to debit our capital account in order to decrease it. So we're going to decrease our capital account by how much we withdrew from the company. So it looks like we withdrew $1,700, our drawing amount, $1,700. So that was a debit of $1,700. So in order to cancel that out, we have to debit is canceled out with a credit. So we're going to credit the drawing account and debit our capital account. So the debit to the capital account lowers the value of the company by the amount that we withdrew, which makes sense. And then we need to cancel out our debit of $1,700 to our drawing account. We're going to cancel out that debit with a credit of $1,700. So those are our 4 closing entries. Now we need to post those. That is the second thing that we need to do, is post those closing entries. So we're going to use the same 5 steps that we always use for posting and go line by line. So starting with sales, a debit of $2,160. So we have the 30th again, and this is coming from our page 8 of the journal. So up here we're on page 8. All right, then we had a debit of $2,160. So now our balance, we had a credit of $2,160. Our debit cancels that out. So the instructions show the balance shown in each account is going to be 0. So in order to show that, we need to put our dashes in there. So this is what a closed out account would look like. So the dashes is how we would write it out. If we were doing it in MindTap, we need to put a 0. So we have a 0 debit and a 0 credit. We can't just leave that blank. So that's why we either put the dashes or zeros to show that nothing was forgotten. It wasn't just an error. There really is a 0 balance, which is the whole goal of our closing entries. So every one of our closing entries, sales, expenses, all of those accounts are going to be left with 0 balances after we're done posting. That's the whole goal. We're closing these out so they have a 0 balance to start out the new period. So you'll go through, post all of these, and that is section 8-2.